In this video, we're going to talk about how to identify high probability setups using price action rules. As a price action trader who is solely relying on pure price movement, the candlesticks that they're putting on a chart, my goal is to follow price action rules to make sure I'm going to identify the right setups to enter. One of the rules is a trend line rule. As you can see, I have a lot of channels on a chart, and it is by design because every single movement in price action is contained by a channel. Now, trend line rule says after there's a break outside the channel, you're not expecting reversal, you're expecting the retest of the new extreme. The same thing goes for the correction. Okay, remember, every single trending market has corrections in between. And I want to time my entry properly. And I'm going to do that if I'm going to follow the trend line rule correctly. To identify high probability setups, I'm going to use the price action counting technique, which means I'm going to count from every new high in bullish channel. Every single time there's a new high exceeded, I'm going to reset my count and I'm going to look for breaks above bar's high. So you have new high, first entry long, pullback, second entry long. We have a second entry long, but the signal bar is below EMA. I don't know how many pushes lower there's going to be. Downtrend played out, which is good, but the better setup is to wait for high-low confirmation setup above EMA. We're thinking bullish because this channel needs to get new extreme. So right now, price action is on its way to create new high. The new high is not formed just yet because this high is still higher than this. I'm going to respect the short and downtrend. Remember, I'm still thinking bullish. I'm just letting the correction play out. What I can see is that this structure is going a little bit sideways. EMA is flattening. So what I'm going to do, I'm going to project a potential trend range because the structure right now, even though we expect new high, is transforming into consolidation. I don't want to buy just yet. I want to see push above EMA. That's the sign that the bulls are in the market. We're going to see buying pressure and we're going to see the new extreme. Okay, so we're finally breaking above EMA. This is good. And we have new low, first entry short, pullback, second entry short above EMA. We need to get new high. We're at 2 key entry points. This is the first high probability setup after the stock market open. The price action is working higher. It was a good, quick, easy scalp. Your stop loss goes one tick below the signal bar, so you still would have survived even though if you're going for larger target. Now, technically we have micro double top, which means I have to reset the count. So this is not really a second entry long, only first entry long. Had this been second entry long, we could have considered because EMA keeps holding every single time. This means the buyers are in the market and we're going to reach the new extreme. And market created the new high for this channel to the left. So you can see how being aware of price action rules can help you stay on the right side of the market. You know what to expect and you're just looking for the correct high probability setup using the price action counting technique. So right now we can see that we have new extreme. Now this is not just ordinary break new high. We can also see that the price action earlier transformed into a trend range. This is why we are marking these key levels to make sense what the structure is going to do. And I know that right now we are trading a trend range. So there's a big chance after new high, they're going to reverse. Okay, because we're at the top of the trend range. And another rule says you want to buy low, sell high. Now I don't think you want to sell just yet. It's a little bit too early. But we have a lower high confirmation setup over the failed breakout. Still room to scalp out. Great signal bar. You can see how the resistance is proven. It's a little bit more advanced, but this setup is definitely a good setup following price action rules because the trend range was established and you can take lower high because you're selling high after new high uptrend played out. By the time you get a failed second entry long, the signal bar is bad and not really that bearish. And I'm still following the short-term channels and you can see break new low, but no clear bias now. So I'm just going to be patient. I don't think I want to look for longs just yet. We're below EMA. I can't really sell and nothing really good. You know, we're in the middle of this main trend range, so I'm just going to be patient. I don't see any good setup, so I'm just going to sit this out because you're in the middle of the main trend range. You have EMA in the middle of these bars, there's a small congestion, just wait it out. You want to take a high probability setup. Only thing I can see is that we are not making it to the resistance. There's an empty room and every high is lower and lower. This gives you bearish bias because uptrend played out as well. So I'm not thinking about buying. In fact, you can see we're breaking lower, so what I'm going to do, I'm going to redraw the downtrend. We have a second entry short, but you're far away from the EMA. And now you have new extreme even for this downtrend. Now, this right here, this overlapping area is what we call congestion. Congestion is just a smaller version of a trend range. And this is important because you treat it the same way. The rules apply. Most breakouts will fail. So you can see at the top, you have failed breakout, which is a tempting setup. It is at the EMA, great signal bar, but this downtrend has a small break in new extreme. So how do I know that we're going to continue working lower? Yes, this is a failed breakout, but I need to see good context And at this point, I just cannot trust the short just yet. So what I'm going to do, I'm going to redraw the short-term uptrend to make sure I'm not selling. I don't want to go long just yet because there is no bullish bias for me. In fact, we're making lower lows and lower highs. And you can see, okay, the key level is transforming as a breakout pullback into resistance, and we're breaking below EMA. So this is a sign right now, okay, another major high that is lower than the previous ones. So look at this structure. This clearly resembles a downtrend. It isn't a strong one. It is a weak one because the bullish correction phase is strong. But because right now this support is transforming into resistance here and here, followed by push below EMA, that's a sign that we are entering a downtrend that I can look for via the channel, connecting these three swings, and it fits very well off the lows. Now when I was watching this live, I even included this earlier swing and my channel looked a little bit like this. Okay, pretty much very similar, but it ended up being the tighter one. So this is the one I'm going to stick with because you can see it also fits better. I'm going to draw this one. You can see no confirmations, and it makes sense because this move is still part of the trend range. You know, this was really the leg down that started the downtrend. From this move, we broke out of the downtrend, and this is where it started. So it fits much better. So we're going to follow this one. This uptrend has a break new high. Okay, we have a second entry short, but it's above EMA. I can't really take. The uptrend also have a new extreme. Can we get a lower higher for the second entry long? We cannot. And by the way, notice, I'm going to draw it so it is easier for you to see. Price action moves in pairs of twos. It may not be easy for you to see this if you're a developing trader, you're just starting to trade, but it's okay. With more screen time, your eyes will be better at spotting these hidden price moves, two-legged pullbacks. So right now we have series of lower highs, lower lows. We're working lower. Two-legged pullbacks, break new extreme. We have a first entry short. Can we get a second entry short? We have, but it is a bullish bar. I, as a seller, only sell below bearish bar. I want to see the confirmation. I cannot sell below bullish bar, and we already also created the new extreme. So this is going to be the pivotal moment where my wider downtrend kept me out of this trade. Now this setup is a double high probability setup. New high, first entry long, second entry long, and new low from the lows, first entry short pullback, second entry short failure, reversal pattern. And when you see break new low and such a strong push above EMA, this is telling us that the market is going to reverse. This uptrend is new high, EMA keeps holding, and this is a great high probability setup. Unfortunately, when I was watching this live, I was playing the downtrend in play, but this is the correct way how to analyze the price action. This fits much better. Break new extreme, reversal is happening, two high probability setups. You're going to combine it even with the second entry long, great signal bar, and market continues working higher. Okay, and we can see that there was even a wider channel, but there is no way for me to capitalize on this because it didn't pull back to the EMA. So we have breaking new extreme even for the uptrend. Now you have a failed second entry long, but this was so bullish. You haven't even touched EMA once before creating a break new high. So a lot of times there's going to be continuous bullish momentum. When you have a break new high without touching the EMA, you know, a lot of times true there's going to be continuation. So I was not ready for reversal, nor I think we can take, because it also didn't tick above this bar. So I'm just going to be patient. I'm going to redraw the short and downtrend working over like this. So right now you can see I'm following the channels. This helps me to navigate the price action. Okay, because if you don't know how price action works, what are the rules? How do you know where the price action is heading? How do you know where the market is going to reverse? We know that the market may reverse here. It has a break new high. Right now the market is working lower. So what do we expect? This channel, it's breaking. So we expect correction to the EMA, and we expect move to a new extreme according to trend line rule. Okay, and also what I can see is flat EMA, move down, move up, move down. So I can project potential trend range because it is still consolidation. But I'm not going to be too afraid about the support or resistance. I'm going to follow the shortened channels. I'm going to redraw the correction. Can we get some setup at the EMA? We cannot. By the time we get lower high, inside bar at the EMA, I can't take it. And market created a new extreme. So I have to pause looking to sell. Price action works perfectly. But this time there was no setup on the correction. So I'm just going to wait. And we are reversing, coming off the range lows. So I'm going to redraw the short-term uptrend. Okay, I have a small break. I expect second entry long because this channel needs to get new high. We only have first entry long, and market continued higher so strong. And now you have a break new high, but because this move to new extreme was so significant and it worked only under first entry long I'm looking for a wider channel. And not only that, this doesn't really look like two legs. This move really looks like a one strong leg up. It looks like a one seamless leg. There is no even touch of the EMA. Okay, so I'm going to draw a wider channel. If you're not sure about the wider channel, there's a one thing in price action that's going to confirm your wider channel. Look at the structure, look at my key levels, look at this bullish push. What is the pattern that's going to help you trust this wider uptrend? Think about this a little bit. It's going to be the breakout pullback. It's going to come all to this key level. If this key level is going to transform from resistance to support, and you're going to see push above EMA, you can trust this wider channel. So let's see. Okay, first entry long, nice. You're above EMA. Okay, so I'm expecting second entry long, which we have here. But once again, I cannot go long above bearish bar. So what is the double bar entry? Okay, double bar entry is solid. I'm going to mark it because this uptrend needs to get new high. EMA keeps holding twice. Breakout pullback keeps holding. But if you are trading today, you know that even double bar entry didn't give you the chance for price action to fill you. So you probably just got left behind here. There is no way to catch it. Okay, price action is correcting. You can see I'm not buying so far from the EMA. There is no setup here. Okay, we have a first entry long, second entry long below EMA I cannot take. There is no setup, very close to potential support, but not really. Okay, we don't fully have new high. Remember, the bias is still bullish. Okay, we traded up into consolidation and we are still above this key level. Okay, so buyers are still in the market. They still want to see the new high. So we have massive rejection. Okay, good, push above EMA. And this is looking something like a triple test. You can see one bounce here, almost bounce here, and massive bounce here. So now we have a great bullish bar, and this is new high, first entry long, second entry long. And also, I treat it as a confirmation high low of the triple test. And because bulls need to get new high, and this support is holding so strongly every time, this is a great high probability setup because you still need to get new extreme. And it is variation of what happened earlier. You can see we spiked up into a consolidation, we need to get new high. The same thing here, we spiked up into consolidation, we need to get new high. So you can see the price action still repeats the same way. And this was a massive spike. You can see all of these sellers, they're selling at the top. Now, their idea is not that terrible, but remember, this channel needs new high and this support is holding. So the bias is more bullish. And this is why they were all forced to exit their stops if they're swing trading. Okay, we have a first entry long, and because first entry long generated such a massive push up, this is where it starts to look, okay, there's potentially a bigger channel because we are not even correcting after break new high, which is what you would expect. So because we are not even correcting and we keep working higher, you can see I'm going to expect bigger channel. So what are you expecting? Okay, we have a channel established. So what are the price action rules? I'm just going to follow the short-term channels. Okay, if there's going to be break new low, which is here, okay, I'm going to be looking for two-legged pullback. I have a second entry long. Can I take? Not really. It's below EMA. So what do I do now if I see second entry long below EMA? Well, high low above EMA, all for second entry short. Okay, but it didn't trigger. And now we have high low confirmation setup. Now, extremely tempting setup. I was about to take this. I was preparing my limit order, but I wanted to see this bar form a little bit bullish because we didn't trigger above this bar. And now we get this bar. It's still above EMA, so context wise it makes sense, but the single bar is a little bit lackluster, but hopefully you know what's going on here. Break new low, confirmation of the second entry. Long and high low is a confirmation setup in a situation like this where there's something wrong with the second entry long, so you can consider it was good enough for a scalp. You can see easy 3 points. Now we broke the low, so I have to reset the count. No failed second entry short. And the channel created the new extreme. So I'm going to mark the new high. And the market keeps working higher. And you can see we are correcting lower. I definitely don't think you can sell just yet because we are still creating higher lows and higher highs. It still looks quite bullish. Okay, downtrend has a break. New extreme. You cannot go long unless you see false second entry short above EMA if you're still thinking bullish. Now, when I was watching this live, I saw two legs down and I was thinking more as a failed second entry short above EMA because I was thinking, okay, there may be secondary channel. But as we push now lower, I deleted it and you now have to switch to bearish buys, especially after this push down. Okay, so what you can do, you can redraw either this short and downtrend because remember, you don't really want to leave a area on a chart, or let's say price movement, without a channel. That's how you're gonna get lost. You want to practice drawing the channels, and you don't really have to be perfect, you just have to be close. Okay, and sometimes you don't even need a channel. You're just looking at lower highs, lower lows. You're looking at EMA. This is why we have EMA on the chart. So you can either draw this channel, or you can look for potential some channel like this, because this is where the downtrend started. This one fits really well. And notice what we have. These channels are a little bit overlapping, but we have new low, first entry short, second entry short. And once again, zoom back. Uptrend played out with the break, 2 legs to a new extreme, followed by series of lower highs, lower lows, and EMA is rejecting every time. So this is right now transforming into downtrend. And you have break new high of the uptrend. So bullish correction played out, and you have great second entry short. Okay, you can see how this bar looked bullish, and at the last second reverse all the way down while we have a break new high. So this is a great second entry short, high probability setup. So I'm going to mark the second entry short, high probability setup. Uptrend has a break in new extreme, and right now we are trading a bearish downtrend. Price session is correcting. We have a first entry short. Can I take second entry short here? You can see the bar looks the same, but it's different. You can see how here the tail is way above EMA and the body is much closer. Here the tail is barely touching the EMA tail trap. The body is so far down and also more congested. So we're not selling here, we can sell here. You can see this is why it's different. The body is much closer. You're selling at the top of the correction. Here you're selling at the bottom of the push phase. And you have potential overshoot. So we gotta be careful. Okay, now we have a very tempting setup, because you can see we have triple test, one bounce, second bounce, third bounce, and we have new low, first entry short, second entry short. And I can also make the channel a little bit like this to make sure it's confirming the channel. Now you don't really need it because you already have triple test and second entry short, but double bar entry needs to be used because the signal bar is bullish. So now I'm gonna mark it only to talk about this, because next time when you have good signal bar, you really need to enter this, because you can see how the resistance is holding triple test and the sellers are just failing to break higher. And also you can see, once again, you train your eyes to see two-legged pullback. This is clear two-legged pullback. The downtrend is in play. You know, I can mark it more aggressive, but the signal bars just are quite ugly. But for studying purposes, for context, I'm marking this. We're continuing working lower. Only first entry short. You have a break. I cannot take second entry short. Right now, we're at no key entry point. We're above EMA and we're not at the trend line. I can only sell above EMA in this instance if there would be a trend line. There is none. Okay, so I want to see push below EMA, lower high or full second entry long, because we need to get new low. The trend line rule applies once again. We need to get new low. A new low created without a setup for me to take. So I'm just going to mark break new extreme. So right now we're more inclined to expect reversal. I would need to see failed second entry short. I don't think high low is enough, because if you expect reversal, you want to see the second entry short failure. Okay, I'm going to redraw a larger uptrend like this. I don't see any good setup. Okay, first entry long, can get a second entry long. This uptrend is new high. We cannot market create new high, but notice the massive push up. Now, when the move to new extreme is the same length as the initial channel, this a lot of times mean that the trend was too strong and there's probably a bigger channel. But when I'm watching this live, I'm not sure if this is overshoot, because you can see massive 3 big bull bars, depletion far away from the EMA. So this can be overshoot, and for this reason, I definitely cannot buy far away from the EMA, okay? But there is right now, as you can see, triple test or multiple test. Fortunately, the signal bar is bad, so we can't enter doji. But because there's a chance this may be overshoot, I would like to see definitely second entry long, which never formed. That ended up not being overshoot, but I don't think still we can take such a bad bar, doji bar. But you can see once again, key entry points, uptrend is in play. And right now I believe it's getting too late. You have a large pullback. It actually worked for a scalp. You can't enter here, you need to use the double bar entry. And you can see it worked for 2.5 points. So our 2-point scalp won, but I don't think you can go long here. It didn't even come back with the limit order. It's too late. You can see the market is about to close, but notice what happened. The market wants to see the new extreme, but there's just not enough momentum. New low, first entry short, second entry short failure, but you don't want to be trading this late. This is the overall picture for today. As you can see, the trend line rule works perfectly. All price action rules can help you stay on the right side of the market and can help you to identify the high probability setups. I hope you had a good trading day. I'm going to wrap it up and I'm going to talk to you next time. Good luck with your trading.